the pilot paper of December 2022, question 22, the statement of cash flows. It reads, you are provided with the following extracts of the statement of profit or loss and the statement of financial position for Darubini Limited for the years ended 30th June 2020, 2021, and 2022. This is Darubini, the statement of profit or loss. Then we have the statement of financial position from non-current assets to the total equity and liabilities. Required, prepare a statement of cash flows for the company for the 2 years ended 30th June 2021 and 30th June 2022 for this. Now, we already have some format. We'll just include something here for working, if indeed there's any working required. If at all there's any working, be viewed here. We will start with profit before tax, just like the other one, profit before tax, the profit before tax. Now, profit before tax is given as for 2021 equal sign negative. This is 14. This is 14,447. 14. We need a positive figure. So it's 14,475. The other one, 17. That is for the 2 years. Profit before tax. Adjustments. Adjustments, and we have depreciation. Depreciation. Already given, depreciation here is equal sign negative, then the 800 equal sign negative. You want to make them positive, that will be 750. That is for depreciation. After depreciation, we have finance cost. I'll also be adding back finance cost. Finance cost. And finance cost has been given as 7,000 and 9,000. So 7,000 and 9,000. Yeah, here they are. Now, additional information, they have not talked about anything that they sold, so there's nothing else that's supposed to be adjusted. Operating profit. Before working capital changes, operating profit before working capital changes, unless there's something else, none. Operating profit before working capital changes. Then inventory, what happened to inventory? Inventory, look at 2020, 2021, and 2022. This one looked like it increased. So we have increase in inventory. Increase in inventory. Increase in inventory. Now it's increasing from 15,000 minus 21. That's an outflow. If inventory increases, it's an outflow. The other one is increasing from 21,000 minus 27. That is also an outflow. Remember, we started with 2020, 2021, then 2022. increase in receivables. So increase in receivables. 45 minus 8750 outflow. The other one is 87 minus 15 460. That is also an outflow. Inventory and receivable. As you move to liabilities, we have accounts payable. So we have accounts payable. They're also increasing. So increase in payables. Payables 3750 minus 6658. The other one is 6658 minus 7989. Payable. Cash generated from operations. The cash generated from operations. Generated from operations. Alt equal that way. Finally, income tax paid and interest paid. So I want to start with the interest paid, then income tax paid. So that would be finance cost paid, also known as interest paid. Take them as they are because there is no additional information to prove otherwise. So under liabilities, you can see that under current liability, there is no interest. So we adjust the increase in payables. The increase in payable is not an outflow. The increase in payable is an inflow. So this one changes. It will be the other way around. Just reverse the formulas to work out the other way. So increase in payable is an inflow, and therefore you take 6658 minus 3750 so that you get a positive figure. The other one would be equal sign 7989 minus 6658. So the increase in payables are inflows and not outflows. That's a good reminder. Then finance cost or interest paid, I was saying that there is no inflow, there is no liability for that. You can see current liabilities, there is no liability for such items. So you take the finance cost as it is. And here it amounted to 7,000 outflow. The other one amounted to 9,000, also an outflow. Same to tax, income tax paid, take them the way they are, 4343. The other one would be 5327. Net cash flows from operating activities. The net cash flows from operating activities. Net cash flows from operating activities. Net cash flows from operating activities. Then cash flows from investing activities. The cash flows from investing activities, if at all we have any. Cash flows from investing. This can be put here. Cash flows from investing activities. Now for investing, you just look at PPE. Just look at PPE. And if there's any money that was paid to acquire property, plant, and equipment, then we'll just be getting that. Then, as you do that, you adjust for depreciation. If there is any depreciation, of course, it affects that account. So that would be, if you have this opening balance, if you want to get any amount that was paid to acquire an uncurrent asset, then it will be closing balance. Closing balance. If there is any depreciation you add, then you less the opening balance. If I draw an account, it will reveal that properly. So opening balance is on the debit side, but closing balance is on the credit side. If there is any depreciation, it will also be on the credit side. So the balancing figure will be closing balance plus depreciation, then you minus the opening balance of 25,800. So let's see. Cash paid to acquire PPE. Cash paid to acquire PPE equal sign. Take the closing balance in 2021, add depreciation. Add depreciation. So add, or if you want, you can less because this one is already negative. The 800 is already negative. So you're using the 800. So if you are adding, then add the 800 that way. But if you want to use the one that is on the other side, it means I'll be deducting because this is already negative. But for consensus, let us add the depreciation in the statement of cash flows, the one that we got in the statement of cash flows. You add 800. And now you less the opening balance of 25,800. So it is the 45,200 plus the 800, then minus 25,800. You realize they bought 2,200 and it should be an outflow. So put that in bracket, then minus, because that should be in bracket. So equal sign negative, then open bracket, click on 45,200 plus the 800 here, then less the 25,800. And 2,200. Same thing here, equal sign negative, open bracket, click on the closing balance of 46,700, 46,700 plus charge for the year of 750, depreciation charge for the year of 750, minus the opening balance of 45,200. Now this is 45,200. Close those brackets and enter, gives us 2250. 2250. After getting cash paid to acquire PPE, you get net cash flows. You're going to get the net cash flows from investing activities. Net cash flows from investing, because there is nothing else. The question was too precise and not complicated. There's only one PPE. If you add that, you get the same answer as what we have up there. Then net cash flows from, or cash flows from financing activities. Cash flows from financing activities. Cash flows from financing. Look at the long-term borrowing. The long-term borrowing is increasing. So if it's increasing, that will be proceeds from issue of loan notes, proceeds from the issue of loan notes, and that will simply be an inflow because the loan is increasing. For 667 minus 333, the other one will be 60,000 minus 46,667. That's an inflow. Proceeds from the issue of loan notes. Now look at share capital. Look at share capital. It's not changing. So there is no issue of shares. There is no issue of shares. Then let us test retained earnings to see if there is dividend, retained earnings if there is dividend. We also want to check if there is dividend or there is no dividend. Do we have dividend or not? If you want to know if there is dividend, this is retained earnings carried down, then this is retained earnings brought down. We want to see if that could be the same. Now these are negative. I think we'll need to draw some account to confirm that properly. So there is one working that we want to do for retained earnings. Retained earnings account in bracket 2022, 2021. 2021, the retained earnings account for 2021. Not a complicated one. Retained earnings for 2021. Now, if you look at 2021, the balance brought down is negative. So negative means the balance brought down is on the debit side. So that balance brought down is on the debit side because it was negative. So there's a balance brought down, though normally balance brought down should be on the other side, the credit side, a normal balance. So this was a loss of 7080. Then balance carried down, which should be on this side, properly put on this other side, is equal sign. So balance carried down is 3053. 3053. Now those balances are just okay. They are on the correct side. So don't worry on that. Because you may wonder, since when do we have balance brought down and carried down on the same side? It's fine the way it is. Because this was a loss. This was a loss, just negate it. 7080 and the other one. Profit for the year. What was the profit for the year? Profit for the year. Profit for the year after tax was 10,133. 10,133. Then balance it and see if it's balancing. So see if this is balancing. So equal sign. If you add all this alt equal and drag up, it's bringing 13,133, which is the same as what we have on the other side. So it's balancing. No need for dividend in that period. So there was no dividend in that period. No dividend because it balances automatically. Now the second one will be the last one. We do the retained earnings. The retained earnings for 2022. Now the balance brought down will change and move this side. Now it's no longer on the bad side. Balance carried down remains on where this other one is. That therefore means that brought down, if you look at the balance brought down, is 3053. Then the balance carried down for that, 15,582. So that is 15,582. Profit for the year, profit for this final year is 12,429. 12,429. There we have it. If you add it again, I think it balances. If you add this, let me add this side and see if it's balancing. Exactly, it's balancing again. So it means there is no dividend that was paid during the year. So that is all, because we've seen that there is no dividend that was paid during the year. So that will be net cash flows from financing activities, the net cash flows from financing activities. From financing activities, you sum, then drag across. Net cash flows from financing activities. Finally, cash and cash equivalents for the year. Cash and cash equivalents for the year. So cash and cash equivalents for the year will be equal sign 2840 plus 2200 plus 13334. Then drag across to get your cash and cash equivalents for that period. Add cash and cash equivalents brought down, then you'll get cash and cash equivalents carried down, cash and cash equivalents carried down. So brought down again, we need to get brought down for 2021. Cash and cash equivalents brought down for 2021. 0, this is 0, plus bank overdraft of 9322, the bank overdraft of 9322. Not plus but minus, because the other one is an overdraft, so minus. That is 9322. That looks wrong. That is not brought down, that is carried down. So I'm changing. That is not brought down. So brought down will be the one for 2020. That is brought down. So equal sign 0, the other one minus. Bank overdraft is 5297. So 0 minus 5297. Now carried down will be equal sign 0 minus 9322. 9322. So the final answer is what we have there. Okay. Now again, if you take this and this, if you add the two to confirm the answer, this plus what we have here, then you realize that it is 9323. So it's less 1, but I believe it's okay. 9323, this one is 9322. There was an issue with sum 1, so I think that is it, but it's correct. The other one brought down is this 0, the one for 2022, the one for 2022, 2021 now, minus the bank overdraft of 9322. So it is 9322 here. The closing for 2021 becomes the opening for 2022. Then carried down will be now the cash and the cash equivalents of 3823 minus the bank overdraft of 0 here. There's a bank overdraft of 0. The final answer that you are getting is that on it. So the cash and cash equivalents carried down is 38. 38. To confirm if this is correct, then it means you take equal sign, this 13, then add this 9322, and you can see the final answer is 3823, same as what is here. So that's how that was supposed to be done, but there was some issue with there is one that was pending on this. This one is telling us 9323. I'm wondering whether it was rounding off or something like that, but it's not bringing 9322 as given in the question. That is it for the pilot paper, December 2022. Question 22, we started from this. Can view with our two workings, cash flows from operating, cash flows from investing, then cash flows from financing.